get into your markets now. Asian stocks started the session on a positive note. This on the back of good performances coming from technology stocks and indications by US Fed Chair Jerome Powell that interest rates would likely come down this year, although there was still an emphasis on inflation coming down to the 2% target. But stocks ended the day in the red. Meanwhile, the Japanese yen rallied to its strongest level in a month against the US dollar. The Nikkei share index closed down 1.23%. The Hang Seng index also lost ground, ending the session down 1.27%, while over on mainland China, the Shanghai Composite Index traded down 0.4%. Over in the United States, Wall Street closed higher after Federal Reserve Chair Jerome Powell said the Fed still expects to cut rates later this year. Longer-term bond yields slipped. The dollar fell and gold prices hit a record high. Data showed U.S. private payrolls increased slightly less than expected in February, although the report does not have a strong correlation with the official non-farm payroll report due tomorrow. The Dow Jones Industrial Average closing 0.2% firmer, the S&P 500 gaining 0.5%, and the Nasdaq advanced by 0.6%. Well, to break down the markets for us, I'm joined by Roy Mutuni. He's a portfolio manager at Sanlam Investments. A very good afternoon, Roy. So do you get a sense that markets are likely to be more stable in 2024, given that the Fed has hinted at interest rates coming down, albeit shallow cuts?
Hi, thanks for having me. It's really interesting times because when you look at the data, there's no real need for interest rates to come down. Liquidity is high, the US economy is growing, employment is still strong there, and all of this is lighting a fire under markets. So the bears are capitulating, the bulls are still running, and it doesn't quite feel like a bubble. So if they're going to add on interest rate cuts on top of this, then in all likelihood, what you see is markets being stable to reasonably positive over the course of the year. I mean, clearly the big issue here is that inflation holds on to current levels or continues to go down. But yes, I think with Jay Powell coming out and saying that rates may come down before inflation gets to its target, that's as bullish as it gets.
Yeah. So in terms of the local currency, the rand, that's been strengthening nicely over the past couple of sessions. Is that more a US dollar story? I mean, how sustainable is that going to be, the strengthening of the rand?
So when you look at the DXY, which is the dollar index, which compares the dollar against its major trading partners, that's actually been weakening, and that tends to be positive for the rand. The dollar index is probably down from about 104 to something like 103. And at the same time, the rand strengthened to that below 19 level. So for so long as that trend is maintained, you should have a relatively strong rand. And exactly like you say, it's mostly a dollar issue, mostly global macro that's driving that rather than local issues.
Yeah. So what's going on with the gold price? I mean, it keeps on hitting all-time highs. Is this because of geopolitical uncertainties or what? And from an investor perspective, although it's probably a bit late now to take advantage of the gold rally, should one be invested in gold mining companies or gold ETFs, for example?
So that's a very interesting question. The thing is, like we said, so long as liquidity is this high, then all of these commodity prices will start rallying. So gold tends to be a hedge against geopolitics and uncertainty, and the more volatile the world gets, the higher the gold price tends to be. If there's a possibility of interest rates coming down while inflation is still high, then you should see gold rallying because gold tends to be a hedge against fickleness by central banks. Now, should you buy the stocks or should you buy bullion? What we can see is a clear signal over the short term that bullion seems to be catching a bid. The stocks always tend to be slightly different. So the rand-denominated stocks will tend to rally because you have a geared effect. But what you have to look at as an investor is the actual performance of the operations. Do they still have reserves? Are they mining? Are their costs out of control? And that's how you need to look at these individuals. When you look at the individual stocks, they tend to have unique factors that may detract or underpin how they react to the gold price. For now, what we're seeing is that bullion is running and the gold shares are lagging behind it.
So the coal miner Exxaro, they put out a trading statement today warning the market that it expects headline earnings to fall by between 16 and 30% for the 12 months ended December 2023. Of course, it appears that they continue to face a cyclical downturn. What are your thoughts on this company?
Well, there wasn't much information in the update, but I think one of the things which they pointed to was lower export prices, lower export prices for coal marginally offset by the weaker rand over that period of time. Remember, all of these commodity companies have been hit by that. I think we'll get a lot more detail when the results come out later on this month.
All right. Roy, we're going to leave it there.